Welcome to TalkTickers. Today, we're diving straight into Rivian's latest earnings call.
Yeah, quite a bit to unpack from this one.
Absolutely. We're going to break down the key financials, the strategic updates, everything you really need to know. Let's get started.
Sounds good. So kicking off with the headline numbers, Rivian reported positive gross profit again, second quarter in a row.
That's right, $26 million. That feels like a significant marker for them.
It is. And interestingly, the automotive segment specifically hit positive gross profit, even if you strip out regulatory credits and depreciation.
Okay, so the core vehicle business is starting to stand on its own legs, profit-wise, before those other factors.
Exactly. Automotive revenue was $922 million. That was driven by 8,640 deliveries. They actually produced more, 14,611 vehicles in the quarter.
And the software and services side, that seems to be growing too.
It is $318 million in revenue from that segment. But, we still need to look at the bottom line. Adjusted EBITO losses were still there.
Right. How much?
Negative $329 million for the quarter.
Okay, so progress on gross profit, but still burning cash overall. How's their cash reserve looking?
Pretty solid, actually. As of March 31st, they had $7.22 billion in cash equivalents, and short-term investments.
That's a decent cushion. What about their outlook for the rest of 2025? Deliveries? Profitability?
Yeah, they did revise their delivery outlook down slightly, now expecting 40,000 to 46,000 vehicles for the full year.
Okay, a bit of a trim there.
A bit, yeah. But they maintain their adjusted EBITDA outlook, still projecting a loss between $1.7 and $1.9 billion for 2025.
Interesting. So lower deliveries, but same expected loss range. They must be finding cost savings somewhere.
Seems like it. They do expect modest positive gross profit for the full year, not just the quarter.
Got it. Any other changes to guidance?
Yeah, capital expenditures, that guidance actually increased, now $1.8 to $1.9 billion.
Why the increase there?
They specifically cited expected impacts from tariffs.
Tariffs. We'll have to dig into that later. But there was some positive funding news, right? Tied to that gross profit.
Absolutely. Because they hit that positive gross profit milestone, they're anticipating getting that next $1 billion chunk of funding from Volkswagen Group.
When's that expected?
By the end of June, so pretty soon. And then Volkswagen is also set to invest another $1 billion directly into Rivian common shares.
That a premium, wasn't it?
Yep, the 33% premium, so strong validation from VW there.
Okay, that Volkswagen money is definitely a big deal. Let's double-click on that gross profit achievement. How exactly does that tie into their bigger picture?
Well, it's not just a number, right? It shows their cost-cutting and efficiency efforts are actually paying off tangibly.
And it unlocks that VW cash, as you said.
Exactly. It's the trigger. It underlines just how critical these operational improvements are. And looking ahead, especially towards R2.
Their next big platform.
Right. They're expecting a faster ramp to profitability for R2 compared to R1. The idea is higher volumes at the normal facility will really bring down those fixed costs per vehicle.
Economies of scale, basically.
Pretty much. It's about making the whole operation more efficient as they scale up production.
You mentioned cost improvements earlier. They gave a specific number per vehicle.
They did. $3,300 improvement in COGS cost of goods sold per unit just in Q1.
That's quite substantial.
It really is. And what's interesting is they did that even though they delivered proportionally more R1s in Q1. Usually the commercial vans have lower material costs, so you might expect the average COGS to drift up slightly.
So it points to real operational gains, not just mix shift.
Exactly. Efficiency,
Right.
better leverage on fixed costs because they were producing more overall. They do hope for some, raw material savings later this year, but tariffs are pushing the other way.
Right, those headwinds. So these efficiency gains are crucial.
Definitely need them to offset the tariff pressure.
Okay, let's talk production and deliveries. Q1 deliveries were down compared to Q4 2024. What happened there?
Yeah, that was mostly driven by the EDV deliveries, the electric delivery vans for Amazon. They delivered a whole bunch in Q4 last year.
Fulfilling a big chunk of that order.
Right, so Q1 EDV numbers were naturally lower. But interestingly, the average selling price per vehicle actually went up in Q1.
How did that happen with fewer vans?
Because they delivered proportionally more consumer vehicles, the R1S and R1T, which sell for higher prices. Plus, they had some revenue from regulatory credit sales boosting things too.
Got it. Now, looking ahead to R2 integration, what changes are coming to the factory?
Big change planned. They're scheduling about a 1-month shutdown for both the consumer and commercial lines at the normal plan.
A full shutdown. When?
Sometime in the second half of 2025. They need that downtime to retool and get everything ready for R2 production, which starts first half of 2026.
And when R2 starts, will it be full steam ahead?
Initially, probably not. They're planning to start R2 production mostly on a single shift in 2026 as they ramp things up.
Makes sense. Okay, R2. Lots of excitement around this vehicle. What's the latest on development and the manufacturing side?
Things seem to be moving along. They've actually started doing validation builds for R2.
So real physical prototypes being tested.
Exactly. And they're pushing ahead with that big 1.1 million square foot expansion at the normal factory specifically for R2.
And wasn't there something about a supplier park too?
Yes, right next door, basically. A 1.2 million square foot supplier park, mostly complete now. The goal there is to bring suppliers closer, cut down logistics costs, streamline everything for normal production.
Smart. And then there's the Georgia plant still planned.
Still planned. They expect to start construction next year. That one's huge, adding another 400,000 units of annual capacity, mostly for R2 and the future R3 model.
Wow. And the R2 price point.
Yeah.
Still targeting that accessible range.
Yeah, they reiterated the plan is for it to start around $45,000. That's a key part of the strategy.
Big difference from the R1. Will it leverage R1 tech?
Absolutely. The core zonal network architecture, the software that's all foundational from R1, which should speed things up for R2.
And the batteries, where are they coming from?
Initially, the cells for R2 will be from LG in Korea, but the plan is for those same cells to be made in LG's Arizona plant starting by early 2027.
So moving toward more localized battery production eventually.
That seems to be the goal, yeah.
Okay, let's shift to tech. Rivian talks a lot about autonomy. What's new there?
They've launched their second-gen platform now. Big upgrades to the perception stack.
Meaning cameras and sensors.
Yeah, way more camera resolution, 55 megapixels total, and much more processing power on board, over 200 TOPS for AI inference.
TOPS, tera operations per second.
Exactly, lots of computing power. Their whole approach is very AI-centric. They talk about this vertically integrated hardware and software creating a data flywheel.
Meaning the cars learn as they drive.
Right. More driving, more data, better AI models, better driving features. It's a loop. They just launched hands-free, eyes-on driving for the Gen 2 vehicles on highways.
So like advanced cruise control.
A very advanced version, yeah. The next steps are turn-by-turn autonomy and eventually the big one. Hands-free, eyes off.
When might we see eyes off?
They're aiming to launch eyes off, at least in controlled conditions like highways, sometime next year. That would be a major leap.
Huge. Are they planning to showcase this more?
Yes. They mentioned an AI and autonomy day planned for the fall to share more details on the roadmap.
And they added someone notable to the board.
Aiden Gomez, yeah. Co-founder and CEO of Cohere, a major AI company. So adding serious AI expertise there.
Is this autonomy work tied to the VW deal?
No. They were clear this autonomy platform is entirely separate from the joint venture work with Volkswagen.
Okay. And R2, will it have the same system?
Slightly enhanced, actually. They said R2 will have 65 megapixels of cameras, so even more visual data.
Always pushing the tech forward. Let's talk about those tariffs again and the broader supply chain issues. How big of a hit are they expecting?
They put a number on it, expecting a direct impact of maybe a couple $1,000s per vehicle in 2025, based on what's been announced so far.
That's not insignificant. How are they planning to deal with that?
Trying a few things, looking at strategic sourcing, maybe finding alternative suppliers, especially for batteries, potentially adjusting incentives or trying to sell a richer mix of vehicles to boost margins.
And building a more resilient supply chain overall.
Definitely a priority. Focusing heavily on sourcing from the U.S. or USMCA regions, Mexico and Canada. Trying to reduce reliance on, more complex global chains.
What about specific materials like rare earths from China?
They're monitoring that. China's export restrictions are a potential risk. For batteries specifically, they feel they have enough cells sourced within the U.S. to get through 2025 and into early 2026.
Okay, so some buffer there.
Yeah. And as we mentioned, R2 cells from LG are eventually planned to be U.S. made. For R1, beyond 2026, they're actively looking at alternatives.
Like different battery chemistries?
Possibly. They mentioned exploring LFP lithium iron phosphate for R1, which avoids some of the materials impacted by trade issues.
And longer term for motors, rare earths are key there too.
Right. Longer term, they're working on developing motors that don't rely on heavy rare earths. Even exploring rotor designs that avoid rare earth metals altogether, aiming for more independence.
Makes sense strategically. Okay, back to the Volkswagen partnership. What exactly is that joint venture focused on?
It's really about the software foundation and the core computing hardware, specifically the operating system and software platforms that run on the zonal ECUs.
The vehicle's main computers.
Exactly. And the zonal ECUs themselves, creating common platforms VW can use.
And how's that collaboration going?
They said it's progressing well, teams are working closely together. Seems positive.
Would they consider working with other automakers too?
They said they're open to it in the future, but right now, the focus is 100% on making the VW partnership work. Execution first.
Got it. Lastly, what do they say about the market? How's demand looking from their perspective?
They acknowledged it's a, quote, challenging backdrop. Increased price sensitivity among consumers is definitely a factor they're seeing.
No surprise there, really.
No. But they highlighted the R1S is still doing very well in its segment. It's the best-selling SUV, starting over $70K in California, and #1 EV SUV over $50K nationally.
So the premium end is still holding up for them.
Relatively, yeah. And they really believe R2 at that lower $45K starting price is the key to unlocking much broader demand.
Bringing more people into the Rivian fold and EVs generally.
That's the hope. Offer more choice at a more accessible price. Oh, and they also gave a shout out to their charging network.
The Rivian Adventure Network.
Yeah, I mentioned its high uptime over 98% and that it's an open network generating revenue. So another piece of the ecosystem.
Okay, pulling it all together then. What are the key things investors should probably be taking away from all this?
Well, first, that positive gross profit, especially stripping out the extras in the auto segment, that's a really important signal. Progress towards actual profitability.
Definitely. And the VW investment.
Huge. Provides cash runway, yes, but also massive validation of their tech and their path.
The focus really seems to be on R2 now.
Absolutely critical. Executing the R2 launch, hitting that price point, ramping volume that's essential for future growth, and, getting to sustainable profits.
And the autonomy piece.
That's the long-term potential differentiator, right? If they can deliver on that eyes-off promise, that's a big value driver.
But there are challenges too.
For sure.
Yeah.
Navigating tariffs, securing the supply chain for batteries and other materials, that's a major ongoing task and risk.
And the revised delivery outlook reflects the current reality.
Yeah, it reflects the tougher consumer market and macroeconomic uncertainty. They're being perhaps a bit more cautious there.
Okay, makes sense. Now let's shift gears to our This Is Not Financial Advice segment. Time for an outrageous but plausible trade idea based on what we've heard. What have you got?
All right, how about this? The tariff hedge. Given the talk about tariff impacts, maybe a couple thousand per unit, and the focus on localized supply chains,
Okay.
consider a long position in companies that are really specialized in manufacturing battery components, not just cells, but maybe anode to cathode materials, electrolytes, specifically within the U.S., or maybe Mexico, Canada, the USMCA region.
Okay, the local players.
Right. Pair that with a short position in international battery component suppliers who are maybe heavily reliant on materials coming from regions facing tariffs, like China.
So the thesis is tariffs boost the domestic guys and squeeze the importers.
Basically, yeah. Increased tariffs could give a cost advantage to the domestic producers while pressuring the margins of those relying on imports. It's a bet on supply chains shifting due to trade policy.
It definitely fits the outrageous but plausible bill. Lots of moving parts there. Geopolitics.
Absolutely. Disclaimer, this is not financial advice, highly speculative, depends on complex factors. Trade policies could change tomorrow.
Understood. Okay, one more.
Let's try the autonomy leapfrog. Rivian's clearly betting big on their AI-driven in-house autonomy stack. They're talking eyes off next year.
Ambitious goal.
Very. So the trade idea. Go long Rivian, betting on their tech progress. Pair that with a short position on a legacy automaker that seems, let's say, behind the curve on developing in-house autonomy.
Maybe one still heavily reliant on suppliers for ADIAs or tied to the old dealership model.
Exactly. The bet is that Rivian's tech-first approach, combined with their direct sales model, lets them leapfrog the competition if or when true autonomous features become a major factor for buyers later this decade.
Capturing share from the incumbents who are slower to adapt.
That's the idea. Again, disclaimer, not financial advice. Huge execution risk for Rivian. The competitive landscape could shift dramatically. Regulations are a big question mark.
Definitely speculative. Okay, that was a good deep dive into Rivian's quarter.
Covered a lot of ground. Gross profit, R2, autonomy, tariffs.
So Thinking about all that, what really stands out to you? What are your thoughts on Rivian's strategy moving forward, especially balancing R1 and the big R2 launch?
And how about those autonomy plans? Do you think they can hit that eyes-off target next year? What about the whole tariff situation? How much impact will that really have across the EV industry? Lots to think about.
Indeed. We hope this breakdown gave you some valuable insights. Join us next time on TalkTickers as we unpack another crucial earnings call.